My first question is just whether you've seen any of the investor and client interest in the tech sector cool off as the year has progressed.
No, well, they've been incredibly strong all year long. You know, Apple remains for the third year in a row the #1 holding at TD Ameritrade. So our clients continue to like it, and it's kind of interesting as we head into this last 2 weeks of the year, and you look at the stocks that our clients are buying. NVIDIA, Apple, Microsoft are 3 of the top 5. So as we head into 2022, it was almost like people took a little bit of a break from them. Not NVIDIA, but Apple and Microsoft not as strong, perhaps the last couple of months. But a lot of interest as we head into 2022. And, you know, Josh talked about a lot of these reasons. You look at Apple, and 42% of the revenues coming from the phone, and 25% from their services, or 27% actually from their services. So you're looking at that and you're saying, is there any reason to believe that these two revenue streams slow down? And I think that, you know, the answer for most people is still going to be no. I know that, you know, valuations for all 3 of them, as Josh mentioned, is something to look at. You know, we're coming off our 70th record close for the S&P 500. So I do think there just has to be a little bit of a note of caution overall, you know, going into the year, that it's going to be difficult to duplicate these last 3 years.
Are your clients showing any caution, JJ? Where are cash levels at the moment relative to history?
Yeah, if I look at where our clients are in terms of their exposure to the market overall, well, they're not highs they've been earlier this year. They're just above average, I would say, and you know that's paid for them to have that sort of pattern as we've headed into the year. And you know, Apple and Microsoft, I think, are a little bit different than NVIDIA as we head into 2022. The reason being is because Apple and Microsoft get an incredible benefit, in my opinion, and that is on the upside they're viewed as growth stocks. And you know, you see that a little bit as I talked about Apple's revenues, Microsoft revenues. Now the cloud is their #1 source of revenue, so that's pretty incredible the way they've tilted toward that. But what happens with Apple and Microsoft that I don't think happens with any other stocks is when we have a sell-off, they're the trusted blue chip names. So people, those are go to those 2 names in times of trouble. In fact, when you hear about buy the dip, that's where buy the dip usually starts with our clients, is those 2 stocks. So when you start to see those 2 stocks after in any kind of down move, people coming for those 2 stocks, that's usually where the rest of it will go. So they are the trusted names in any times of trouble because people feel they can start there. If we continue to go a little bit lower, it's interesting, they will even often double up on those 2. And let's face it, over the last 10 years, that philosophy has certainly paid off.
And JJ, step away from tech for a moment. Which is the other sector that people are most rotating into at the moment?
Well, it's really been interesting for the last few weeks, Wilf, and that is the EV space overall. Rivian, Ford, Tesla. When Tesla got down to, you know, it got down to 900. When it started back, right around 950, we started to see people start to buy it. It was very interesting. I think they needed to see a little bit of the, you know, back in like December 18th, 20th, that type of area. They needed to see a rally first, in my opinion, before they sort of jumped on. Then they jumped on quite a bit more between that and like 950 and about 1,025. You started to see our clients come in to buy Tesla quite a bit more. And to me, Tesla's really interesting because I don't know that there's a stock that really reflects consumer confidence more. When the market starts to upswing, that is a stock that people kind of tend to jump into pretty quickly when they start to get confidence on what's going on in the overall market.